What if I told you that one of the biggest tax changes for seniors in years could be sitting in the tax code right now, and most retirees have no idea it's there? If you're 65 or older, stop what you're doing for the next few minutes, because this isn't another story about government promises or political talking points. This is about whether you could qualify for an additional tax deduction worth up to $12,000 if you're married and filing jointly, or up to $6,000 if you're filing as a single taxpayer. Here's the problem. A deduction like this isn't automatic just because you turn 65. There are income limits, qualification rules, and filing requirements that determine who receives every dollar and who walks away with nothing. Miss one of those rules, and you could end up paying more tax than necessary without ever realizing there was another option. So before you file your next return, let's answer the questions that actually matter. Who qualifies? How much could you really save? What mistakes could reduce or completely eliminate the deduction? And most importantly, what should you do before you file so you don't leave money behind? Now, why haven't you heard about this before? That's because this isn't a deduction that's been sitting in the tax code for decades. Congress approved a temporary additional deduction designed specifically for qualifying taxpayers who are 65 or older, giving many retirees the opportunity to reduce the amount of income subject to federal taxes during the years it's available. The important thing to understand is that this deduction doesn't replace the standard deduction or the additional age-based deduction many seniors already receive. It stacks on top of those existing deductions if you qualify. That's what makes this change so significant. For some retirees, this isn't about saving a couple $100s. It's about protecting thousands of additional dollars from federal taxation. The first thing you need to do is confirm one simple fact. Will you be 65 or older during the tax year you're filing? If yes, keep going, because the next question could determine whether you qualify for one of the largest deductions many seniors have ever seen. The question isn't whether this deduction exists. The question is how much of your own money you may finally be able to keep. Think about that for a minute. This isn't the government mailing you a check. It's potentially reducing the amount of income the federal government is allowed to tax in the first place. The less income that's taxable, the lower your tax bill may be. Now, pull out your last tax return. Don't worry about every line on the form. Look at two things. First, how did you file? Single or married filing jointly? Second, find your adjusted gross income. Those two numbers will tell you whether it's worth taking a much closer look at this deduction before you file again. This is where many retirees unknowingly lose money. They hear there's a new deduction for seniors and immediately assume everyone over 65 automatically qualifies. Unfortunately, that's not how it works. Age is only one part of the equation. Your income matters just as much. If your income rises above certain limits, the deduction begins to shrink. Earn too much, and it eventually disappears altogether. That means two neighbors who are both 70 years old could receive completely different tax benefits simply because one earned more taxable income than the other during the year. Before you make a large withdrawal from your IRA, before you cash out investments, before you sell property, stop and estimate how that decision will affect your taxable income. One financial move could reduce the deduction you're eligible to receive. One of the biggest mistakes retirees make is believing every tax break becomes permanent. That's simply not true. This additional deduction is currently scheduled to be available only for a limited number of tax years. Unless Congress extends it, the opportunity eventually disappears. That changes how you should think about the next few years. If you've been planning to withdraw money from retirement accounts, convert funds into a Roth IRA, or sell investments that create taxable income, now is the time to look at the bigger picture. Timing matters. Making those decisions while this deduction is available could produce a very different tax outcome than waiting until it's gone. The point isn't to rush into anything. The point is to know the rules before you make decisions that could affect your taxes. Before you send your next tax return to the IRS, slow down and verify a few things. Make sure you meet the age requirement. Estimate your income before the end of the year instead of waiting until tax season. Compare that income to the eligibility limits. Then confirm that your tax software or the person preparing your return is actually calculating every deduction you're entitled to receive. Don't assume someone else has already checked. Ask the question. If you're paying someone to prepare your taxes, ask them specifically whether you've been evaluated for the additional senior deduction. That one conversation could save you far more than the cost of asking. There's another claim spreading across social media that deserves some attention because it's confusing a lot of retirees. Some people are saying this deduction completely eliminates federal taxes on Social Security benefits. That's not what this deduction does. What it may do is reduce your overall taxable income. Depending on your situation, that could indirectly affect how much of your Social Security becomes taxable. But it does not automatically make your Social Security tax-free. That's why it's important to separate internet rumors from the actual rules before making financial decisions. Before you close this video and move on with your day, pull out last year's tax return. Find your adjusted gross income. Confirm your filing status. Write down your age, and if you're married, your spouse's age as well. Those 4 pieces of information will tell you whether this deduction deserves a closer look before you file your next return. If the law now gives qualifying seniors an opportunity to reduce the amount of income subject to federal taxes, don't assume someone else will catch it for you. Ask the questions, review the numbers, understand the rules, because the difference between knowing this deduction exists and actually claiming it could be worth up to $12,000 for qualifying married couples. And that's too much money to ignore.